Hey there, it's Blandon here from Mortgage HQ. In this video, I like to go over a couple of articles that you've probably seen online. Houses that are incomplete, developers going bust, builders sort of not honoring their master build guarantee contracts. And we can sort of see what we can learn from it. It is definitely a sad moment in the market because this is the trend. A lot of builds are not being completed. So we're going to try understand what a master build guarantee is and what liquidation is and sort of how that happens. And then thirdly, as an investor or someone who wants to build houses in this current market, what do we need to watch out for and how we can sort of approach it? So you might have seen this article here, 27 owners left with unfinished homes have no master build guarantee after liquidation. And then you've got this other one here, first home buyers dream shattered as another Wellington firm goes bust. It's the same company, same construction company, and basically a couple of them could claim insurance. Essentially, if it was incomplete, then they could claim insurance for some of that money back. But there were a whole bunch of people that signed a contract that thought they had the guarantee and just never got paid out because they said it was never put in place. So what's going on? What is the process with master build guarantee? Just because you signed a contract with the builder and it says you're going to get one, how do you make sure that you get one? So if you just go on the website, it's actually quite simple because a lot of these people who have signed these contracts probably and might not have involved a lawyer or bothered to maybe go on the website to see what is needed to get that master builder guarantee in place. And it's relatively simple, but you got to make sure you do the work. So how the process works is the builder is the one that will document all of the things that you need to send to master build services. And they do this before the work starts. So you might pay your deposit, your initial deposit with the builder, but they need to make sure that they apply for the master build guarantee. Now, what's really important, and I think this is one of the steps that when I'm reading these articles, this is the unfortunate step that a lot of these people miss, which is making sure that if they didn't get the confirmation, they contact Master Build Services directly, right? They need to go contact them and make sure it's in place. And what is a master build guarantee anyway? So there are essentially two main things that it covers. One is the loss of deposit. And then the second one is if it was not completed, they can't complete the work. How can you make sure it does get complete? And if there was a cost rise, how do you pay for the extra money? So the deposit wise, you can actually claim up to 50,000 or 10% of your build contract, whichever is lesser if it doesn't start. So maybe you put a deposit down and they don't complete it. And if you don't get your deposit back from the lawyer, you can claim on your master build guarantee. The second one is the non-completion, up to 500,000 or 20% of your contract price. Now, the settlement amount works like this. It's not that, hey, if they don't complete it, they just give you 500,000 or 20% of your build contract. That's not how it works. Essentially, what happens is the risk for you as someone building a house is that if you can't complete based on the contract that you signed maybe a year ago, right? The build might cost more this year, especially with inflation right now. It's costing a lot more to complete the same house because of inflation. So if the builder don't complete and then you have to find a new builder, the risk is the cost increasing significantly and you just don't have the money to complete it. Because normally as a broker, I see that clients try to push for maximum lending anyway. And so it's going to be quite hard for them to come up with that cash or the lending to complete it. So this is where this insurance, I guess you can call it an insurance, will be handy. And so the amount that you're covered for is essentially the old contract and the new contract. The difference is what they'll pay, and it's up to 500,000 or 20%. So you still need to carry on building it. Obviously, there might be some extra costs involved because, they might have taken some of the build costs, when you paying your deposit and some of the work's not completed. So that would mitigate your risk as much as possible, but it's not going to mitigate all your risk. So if you go back to here, this is sort of what sucks for these families here. They essentially thought they had the guarantee, but it was never put in place. And that's really tough. So what is a liquidation and how does it actually happen? So if you went on Investopedia, okay, liquidation is essentially a company closing its door to do business. And what happens next is it sells off all the assets that it has to pay the debtors. And so why would a company go into liquidation, right? There are two main triggers. And the first one is that if they were to stay in business, the longer they stay in business, they're just going to incur a much larger and larger loss loss in income. So it's actually better to stop doing business and file for bankruptcy. The second type of liquidation comes from defaulting on your loans. The debtors basically can choose to call on their securities. So the simplest way to think about this is if you got a mortgage on your house, right, and you choose not to pay for your repayments, or you just can't make your repayments, the bank has the rights to say, I'm going to sell your house to pay for the debt that you own. And essentially that's what's happening with these businesses. They have what we call a GSA. It's essentially a guarantee on the business, right? If they don't pay for their debt, they can sell the assets in the business. And so you can see here, you'll see that there are lots of money that they owe that they need to pay, right? 400,000 owed by the company to creditors. And so that's why this company had to discontinue. Now, how does it relate to building industry though? So the biggest one that you've seen and heard is the inflation of material prices. And so if you're a buyer, you might lock in a contract to say maybe build a house for $1 million. You'll be very happy because, you know, it's in today's price, and if it changes, it's still $1 million. You've got the peace of mind. But for the builder, the risk is that if they aren't able to build as soon as possible, they have to buy the material in the future, then there is a potential cost overrun. So they might have to buy the materials at a higher price, even though you're only going to pay them the same $1 million. It might cost them 1.2 million. And that's what's happened. Like the build cost has gone up so much in the last year or so, the prices have gone up significantly. So that's one aspect, the cost that they locked in, and they actually have to fork out more money to build the house, but it's not from the buyer's pocket. Secondly, there is a shortage of labor and also material that causes delay. So the delay also spirals with the price rise, because the longer they wait, the higher the cost is. And you have heard that JIB's not coming in. Now, if you mix this in with a company that uses debt to fund its construction, you think about this. If the materials are not coming in and it's costing more, that means they have to borrow more debt and they have to pay for more interest. And now if they were to use second tier lender, which is short-term lenders, how they typically charge is an extra fee every 6 months or 12 months. It's not your traditional bank loan where you have a lower interest rate and you sort of just keep paying. You have to pay a fee, 1%, 2%, 3% every 6 to 12 months. So it could cost a lot when there's delays. Now, if you look at the article that we were reading, there were 27 houses or so. And if you think about this happening for all of them, really, really quickly, the problem's going to spiral. And they don't have the money to pay the debtors and the laborers, then they would just choose to close down the company. So how can we adjust as home buyers wanting to build, or mom and dad developers wanting to build some houses on our site? Because you're going to be directly engaging some of these builders. Well, first of all, I think it's important to understand how established those companies are and what their balance sheet looks like. And if this information is not easily accessible, then maybe you just want to choose someone who can be more transparent. Maybe you have to pay extra. But in this current market, that's going to be quite important. Someone with a strong balance sheet where there is high level of capital and cash. I think the second most important aspect that I've learned through these articles is the master build guarantee. And you got to do that properly. In the article, even though the clients have signed these contracts with the builders saying that they will get the builder's guarantee, they never received the confirmation. So it's very important before the build starts and before you build the next big payment, make sure you have the master build's guarantee in place. And I would suggest the best thing to do, because they are contractual obligation, is to get the lawyer involved. Now, again, it's going to be extra costs, but is costs that you need to spend because it's going to be your insurance. You want to be in a position where you can reinforce these contractual obligations. In conclusion, I do feel really bad sort of for a lot of these families in these situations where these builds are not being completed. Some can claim insurance, or you can say the master build guarantee, some can't. And there are a lot of hard-earned savings lost. I think it's really important that you have the right consultants in place, like a good mortgage broker, a good lawyer, good property accountant, just to be by your side so that they can see things from multiple angles and not just the one, and saving that money. So hopefully you got something out of this, and if you learned something, definitely support us by smashing the like button for the YouTube algorithm. I'll see you guys in the next video.